Hi, Facebook Live. It's Wanda Strickfaden with Improved Credit Consulting Firm, and I'm here to talk to you guys about how to prepare your credit for home ownership. Now, whenever I meet a customer, I always set up at least an hour of a time to really go over their credit report because it's important that every consumer understands what lenders look for in order for you to qualify for a loan, regardless of what type it is. If it's an installment loan for personal reasons, or if you're applying for a student loan, you want to know what lenders are looking for when it comes to qualifying for that. Even credit card companies, they have specific things that they look for as well. But today we're going to talk about what lenders look at for a home loan. So first of all, for those of you that have never established credit, I do have a video out there where I explain how to establish credit. All you have to do is look us up at Improve Credit TV on YouTube, and you'll be able to see a video that discusses how to establish credit for those that have no credit at all. And I also have videos about how to fix your credit if you have any credit issues as well, and regardless of what it may be, if you have collection debts that need to be resolved or if you're a victim of identity theft. So look us up at Improve Credit TV, and you'll be able to find this on YouTube. I also have it on my page, so if you just scroll into videos, you should be able to see some of those videos there as well. So let's talk about this. First of all, if you haven't pulled your credit, I always recommend pulling a free credit report with each bureau. So visit www.annualcreditreport.com in order to pull your free credit report. Each bureau will give you a free one once a year. So just go ahead and do that, and don't get involved in paying for extra services because they're going to try to sell you on, paying for your credit score. And usually each bureau will charge anywhere from $10 up to $20 to pull your credit report if you include your score. So don't do that. Don't get involved in that. Just click on no credit score, just your credit report, which is free. Now keep a copy of that because each bureau through annualcreditreport.com will give you a reference number or a file number, which is usually on the very first page of your free credit pull. So just remember that you want to keep a copy of that so that if you ever want to log back in to check your credit report a month later, 2 months later, 3 months later, you're going to definitely be able to do that if you keep a copy of that free credit report. So make sure you do that. And when you keep a copy of your free credit report, like I said, each bureau will give you like a file number or a reference number. So when you click at the very bottom for each bureau, for example, once you pull your free credit report with annualcreditreport.com, you're going to go ahead and go to that website after you've pulled your free one. If you want to revisit it, you'll go to Experian.com and you'll go to the very bottom of that page and you're going to click Disputes. Even though you're not going to dispute anything, you just want to check your credit report. But you're going to click Disputes and then click on Online Dispute. And when you get to that page, it'll ask you for your reference number or your file number for that bureau. So Experian.com has one, Equifax.com has one, and TransUnion.com has one. So once you click in there, you put in your file number or your reference number with your information like your name, address, social security number, and date of birth, you'll be able to revisit that same credit report again to review it. So that's a good way of knowing how you can access your credit report for free for a whole year. Again, don't get involved with buying the credit scores. That's just a waste of money. Now, it is good to know what your scores are, and if you're curious to know what your scores look like, you can always go to like a third-party website. Like I like to use privacyguard.com. That's one of the websites that I use, privacyguard.com, and they'll give you a 14-day trial for just $1. So if you decide to do that, just to look at your scores, figure out, how your scores look like, you can visit privacyguard.com and then just try the 14-day trial for $1 and see what each bureau is reporting when it comes to your score. You don't have to keep it active. You can cancel it before the 14-day trial ends. But that's a good way of getting your credit score online and figuring out, like, what does my score look like? Now, with that being said, scores are important when it comes to buying a home here in the U.S. So if you're interested in establishing credit, the first thing you're going to want to do, obviously, is to open up lines of credit for those that have no credit at all. And credit means anything active. If you're paying a credit card off, a car loan off, a student loan off, That's active lines of credit. That's exactly what lenders want to see. But people may not have that. Some people have collection debts reporting on their credit report, but they have no active lines of credit. And if that's the case, obviously we're going to talk about how to take care of that today, but you really want to be able to establish credit. So first things first, look at your credit score, figure out what it's reporting. If you have no credit, usually you have no credit score. So if that's the case, you want to establish credit. Now, one of the lenders that I like to use to establish credit is Wells Fargo. Now, you don't actually have to be a member at Wells Fargo to open up a secured credit card there, which is great. So for some of you who may not be, too crazy about opening up an account with Wells Fargo, you don't have to be a member. All you have to do is let them know you want to establish credit. You like to go ahead and open up a secured credit card, and then they're going to require that you put a deposit to that account. So because it's secured with your own assets, so that basically means you're putting your own money into the account, you definitely want to go ahead and be prepared to have a minimum of $300 to open up a secured credit card at Wells Fargo. And this is for those that have no credit at all, no active lines of credit, okay? So once you open up that secured credit card at Wells Fargo, keep in mind they will pull your credit. So it's not credit score based when you go to Wells Fargo. So what that means is that when they pull credit, they're not looking at your credit report to see if you owe other companies, unpaid debt. They're not looking at that. What they're doing is they're pulling a consumer report. They're checking to see if you have an unpaid checking account with another banking institution, an unpaid savings account, or an unpaid over limit fee account with another institution. If you don't owe other banks other fees, then you'll qualify for a secured credit card at Wells Fargo. Now, Bank of America is different. You could go to Bank of America to apply for a secured credit card, but they are going to pull credit and they will consider your score as a base of qualifying. You can owe other debtors, bills. You can't owe other banking institution a bill. Like you can't owe another checking account, saving, or over limit fee, but you have to have a credit score of 640 with Bank of America. So you want to be aware of the different guidelines that each bank has to qualify for secured credit card. And Capital One is another good example. So when you contact Capital One, they will pull your credit, but it's not credit score based, like I said, and they're not. And even if you owe other debtors, that's okay. They just basically look at your credit report to determine, where you're at, and then they'll let you know what type of credit card that you qualify for. Now we're talking about secured credit cards with either Wells Fargo, Bank of America, or Capital One. Now, when I tell my clients to establish credit, I usually tell them to open up 2 secured credit cards, one with one institution and one with another. So if you decide to open up one with Wells Fargo and another one with Bank of America, that's perfect. Or if you decide one with Wells Fargo and another with Capital One, that's okay too. But do it all in one day. So when you establish credit, make sure that you're opening up 2 secured credit cards all in one day. And make sure that you have a minimum of $300 for each, provider. So $300 for Wells Fargo and $300 for Capital One. That's your deposit. That's how much you're putting into your secured credit card to establish credit, okay? So that's a good thing when you open up secured credit cards, especially if you have no credit whatsoever for home ownership. Now, the third line of credit that you're going to want to consider opening up is a secured installment account at your local credit union. A secured installment account. Usually, if you go to your credit union to apply for something like that, they're going to require a minimum deposit of $500. So be prepared with cash because you're going to need $300 for Wells Fargo, $300 for Capital One for a secured credit card, and then about $500 for a secured installment account. And like I said, a secured account is basically you securing it with your own assets. You're depositing the money into the account. It's basically borrowing against yourself. You're going to get charged interest. They're going to give you a term, especially with an installment account. They may give you a 6-month term, a 12-month term, or up to a 24-month term, and they'll put interest, against that, and then you'll be required to make monthly payments. So you're borrowing against yourself, but that's the best way to establish credit. Now, so 2 secured credit cards, 1 secured installment account at your credit union, okay? 2 secured credit cards, 1 secured installment account. That's 3 active lines of credit. That's what lenders look for when it comes to purchasing property. They want to know that you have at least three active lines of credit. And they require that you have a minimum of a 12-month positive payment history with all 3 active lines of credit before you can buy a property. So if you have no credit at all, you definitely want to establish credit right away. Do it all in one day. Here's what's going to happen. When someone pulls credit report to give you a credit card or an installment loan, it's considered a hard pull. What that means is that your scores will drop anywhere from as little as 1 point up to 15 points per pull per bureau. So if you really add it up, that could be about a 45-point decrease in 30 days when you allow a credit card company to pull your credit, like Capital One for a secured credit card, a Wells Fargo bank to pull credit for a Wells Fargo secured credit card, and then a credit union to pull credit for a secured installment account. That could be a 45-point decrease all in one sitting. But I have done so much research. I've been repairing credit for 15 years now with Improved Credit Consulting Firm, and I've done it myself. I've actually applied for credit cards all in one day, 2 credit card companies in one day, and I was able to see a minimum decrease of about 5 to 10 points instead of a 30-point decrease. So for some reason, it tricks the system, the scoring system. It doesn't even know like that you're even applying for so much credit in one day. Obviously, don't open up 10 credit cards. You know, that'll be a drastic decrease in your score if you do that. So don't do that. If you have no credit, you may not even have a credit score at all. So opening up 3 active lines of credit like that, it's not going to be a big deal because you don't have a score. But if you do, meaning like if you have collection debts reporting on your credit report, you probably have a score. Now, once you open up those lines of credit, the most important factor is paying your bills on time. So if you have 2 secured credit cards, each with a $300 limit, and you have a secured installment account of a $500 limit, your 2 secured credit cards, you never want to borrow more than 30% of your limit. That means you shouldn't borrow more than $90 on each card. If you're putting $300 on each card, don't borrow more than $90. So once you do that, and if you stay below 30% of your limit, you're going to notice that your scores will begin to improve. You'll see your scores begin to improve anywhere from like 1 up to 20 points a month just because you're not borrowing too much. Establishing credit is not to go into debt. Establishing credit is just to be able to grow in assets, purchase property, start a business. You know, it's not about going into debt. Some people get really caught up with credit cards and having balances and having high interest rates and never being able to pay their bill. You don't want to do that. You only want to establish credit so that you can purchase property, so that you can start a business one day, you know, so that you can build in assets. That's what credit is about. It's not about getting into debt. It's about establishing enough credit so that you can have a lot of assets, purchase property, start a business, really. So once you do that, once you open up 2 secured credit cards at your local bank or at Capital One and open up a secured installment account at your credit union, because those are the only ones that provide secured installment accounts, which is at your credit union. So become a member of your local credit union. That's considered a good mixture of credit, having 3 active lines of credit, and then pay your bills on time. That's so important. Lenders, when they look at your credit report, if you're delinquent with any of your bills within the last 12 months, you're not going to be able to qualify for a loan until a year after that. So it's so important. Pay your bills on time. Don't borrow a lot of money. So if you're putting $300 on your credit cards, borrow only 30% of your limit. Stay below 30% at all times. Only borrow $90 on each card, especially if your limit is $300. So that's a good way of establishing credit. And then after 12 months of on-time payments with all 3 active lines of credit, you should have a really good credit score, anywhere between a 680 to a 720, especially if you don't have any collection debts reporting on your credit file and you're just paying your bills on time. You should have a really good credit score. Now, lenders look at credit score to qualify you for a loan. There are lenders that we work with directly that will allow you to get a loan, a very good loan, with Federal Housing Authority, which is FHA. So for some of you who haven't heard about that product, it's a government loan, and you can borrow up to $400,000 if you qualify, because they'll look at your income and your debt and determine if you qualify for up to $400,000. For some of you, you may not need that much money for a loan, but they will allow you to borrow that much if you can actually qualify for that loan, or whatever you need, 100,000, 200,000, depends on what you're looking for. But with an FHA loan, you'll get market rate. So if market rate is 3.25 at a 30-year fixed, you'll qualify for that with FHA. And I have lenders that work directly with Improved Credit that will give you a loan as long as your score is 580, which is perfect. There are some lenders out there like Wells Fargo, Bank of America, that require that your score is a minimum of 640 to qualify for FHA. That's a 60-point difference. So if you are interested in establishing credit, or if you're interested in fixing your credit and would like to qualify for an FHA loan, which is one of the best products available out there, definitely call us. We can help you make sure that your credit is up to par so that you can qualify for that loan. And our number, if you need it, it's 704-877-8739. And also our website is www.debt.com. The letter I, the letter C, debt.com. You can visit our website or give us a call so we can help you with that. Okay, now we've got 3 active lines of credit. That's what we just talked about. Making payments on time for a year, which is important, and having a minimum credit score of at least 580 to qualify for a loan. For some lenders is 640. So be prepared to have a credit score of between 580 and 640, depending on where you're at financially. Okay, so now we have that, right? You want to prepare your credit for that, but you also want to have money for a down payment, for closing cost fees, for inspections, for an appraisal. So I just want to give you guys a brief, idea of how that would look like. So with FHA, which is one of the best products available out there, if you decided to buy a property for $100,000, you want to have 3.5% available for a down payment. So that would be $3,500, right? And then you also want to have about 4% for closing cost fees. That takes care of insurance, taxes, mortgage fees. So it takes care of all that. That's an extra $4,000. Okay, so that's $7,500 right there. And then you want to have money for inspections, like a home inspection, and if it's a used home, you definitely want to have a termite inspection. Each of them is about $400 each. That's $800. And then you also want to have money for an appraisal. So basically, altogether, you're going to want to have about $8,700 if it's a $100,000 loan. $8,700 for a down payment with FHA, which is 3.5%. Closing cost fees, which is about 4% of your loan amount. I'm just giving you like a rough estimate. And then you want to have an extra $1,500 for an appraisal and inspections. So roughly about $8,700 if your loan amount is $100,000. So that gives you an idea. Prepare financially for that. I usually tell my clients, try to save a monthly savings, especially with something like that. Try to save like $725 a month, and then within a year you'll have more than enough money for your down payment, closing cost fees, inspections, and the appraisal, and you're establishing credit because you have 3 active lines of credit. So I usually give them like an idea that they need to prepare monthly for savings for that. Now, I have videos out there that talk about how to pay off collection debts, how to negotiate settlements. But it's always important that you really understand what you're looking at when it comes to your credit report. That's why we're very important in this industry. As a credit expert, I look at everything on your credit file. I look to see if your debts are really old, meaning that they're over 7 years old and you've never paid it. Then I go ahead and dispute them for removal, legally get those things removed. I look at, debts that have balances that may be anywhere from $100 up to $10,000, whatever you may owe. And I negotiate settlements, usually anything below 50% of what you owe. So meaning like, depending on the balance, I can settle the debt for 25% or up to 50.